One of the biggest mistakes that we see student loan borrowers make over the last 8 years at FitBucks is having the wrong student loan monthly payment when they're on an income-driven repayment plan. Now, when we see this error, it most of the time costs those borrowers $300 to $500 a month. That means every year they're costing themselves between $3,600 and $6,000 a year. And these plans are 20 or 25 years long. That adds up to being a lot of money. Now, these errors happen because of one of two reasons. Either you, the borrower, completed the income-driven repayment plan application incorrectly, or B, you did it correctly, but the loan servicer and the Department of Education just messed up the calculations. Today in this video, I'm going to walk through with you how to avoid the first part. A, meaning how to actually complete the income-driven repayment plan in the different scenarios, so that way you know you're doing it correctly. And then I'll also touch on how to do B, how to make sure the loan servicers are also calculating the correct monthly payment. So with that, let's jump into the application. So first things first, you don't actually apply for income-driven repayment plans at your loan servicer. You apply at studentaid.gov. And one of the first screens you're going to see is a screen that you have to approve. This is just you saying that you agree to share information. Just a bunch of legal mumbo jumbo. You can probably just skip down right to the bottom and just click approve and move on. The second part will confirm all your borrower information, your contact information. You want to make sure that this is all up to date, especially if you end up moving. You want to make sure on studentaid.gov it is correct, because if something ever happens to your student loans, this is the address they mail the stuff to. So you want to make sure that that's all correct. Okay. Here we'll show you a list of all your student loans, your loan eligibility, all the different types of loans that you have. Again, this is just a summary screen, and you can click continue there. And let's go ahead and click continue. And this is where we can start getting into financial information. If you're married, or not, if you're not married, it's easy. You just click no and click continue. If you are married, you click yes. Are you separated means like if you're divorced or living apart or whatever it may be. If you click yes, then they're going to go through one sequence where they're just asking your income. If you click no and you click continue, well then it's going to say, can you access your spouse's financial information? Okay. If you click yes, which is what you need to do because you're going to need your spouse's financial information, then it's going to ask you if you file taxes jointly or separately. Before I get to these two things, I want to make sure you understand why it asks, do you have access to your spouse's financial information? Because this is the reason why so many people get the wrong student loan monthly payment. Okay? In a few more sections, it's going to ask you for your spouse's information. And if you don't put the correct information in there, and you are filing jointly, it can really mess up your student loan payments because of how they do the calculations. Because when they do that calculations, they factor in your spouse's income as well as their federal student loan debt. So if your spouse has federal student loan debt and you don't put the correct information in there, that's where we see the borrower make a mistake. And I'm going to show you that screen in a minute. But before I get to that screen, this next question, it asks, do you file your taxes jointly or separately? Again, this is a major, major question, because if you click we file jointly, then it's going to be based, your monthly payment will be based on your dual incomes and dual federal student loan balances. If you file separately, it's only going to be on your income and your student loan balance. This is where we see the government make the most mistakes. People click separately and they still calculate it based on dual incomes. Okay, so that is how we need to make sure that we click the appropriate one here. So here, let's just say in this example, I'm going to click separately, and it brings in here, this is where they request your spouse's information. Again, it's very, very, very important that you put the correct information in here. I'm just going to put in some random numbers in here so that way that I can continue. So just some random numbers, I click continue. And then it says, hey, great, you added your spouse's information. Now at that point, they say they confirm your spouse's information. I don't trust it. That's why you always got to still make sure that they calculate the payments correctly, okay? Here, they're going to ask you for family size, both now, like will it change in the future or not. This is important because of how they actually calculate the monthly payments on your student loan. So for example, if you're pregnant and you're going to have your child in like 5 months, you can click yes, and then you can say, okay, well, this is how many dependent children I'll have, so on and so forth, and they'll take that into account in your monthly payment for your student loans. Okay. Here we just don't need any information on this screen. We can skip ahead. Again, that first question was how many new dependents do you think you're going to have? This next piece is how many dependents you currently have. Okay. So make sure that you fill that part out correctly, because sometimes people just skip over it thinking that they actually answered the question already. And that is something that can, again, cost you on your monthly payment. Because if you're adding a child and you already have one, your monthly payment would be lower. And so if you make the mistake of just saying, well, like I added one, but I think the screen is the same thing. We see people do that all the time. So they just click next. The household number is going to be 1 child instead of 2, which means they're going to make a mistake on your monthly payment. Okay. Here, it's going to ask you about income changes since your last tax return, okay? It's going to ask, did you file a tax return, in either of the 2 most recent tax years? The answer is yes, the answer is no. You can see what happens and it toggles back and forth, okay? It's going to ask if you haven't and you just say no. It says, do you have taxable income? Yes. And then does your spouse have taxable income? Yes. And then you can continue from there. If you say yes, it's going to ask you, like, has your joint income significantly decreased since you filed your last tax return? Okay. If your income went down, you want to do this ASAP so that way you can get a lower monthly payment. For this example, I'm going to say no. Do you have taxable income? Yes. Does my spouse have taxable income? Yes. I click continue. Again, this is where people make a lot of mistakes, okay? Here, you can self-certify or use your tax return. So if you use your tax return, you don't have to upload anything, okay? However, there's situations where we work with people, for example, that their income either went down, which you're gonna want to show with a pay stub or a W-2, okay? Or they might be having changed jobs where it's like, hey, I might make that same amount, but my salary's a lot lower, but I have commission and so on and so forth. Or maybe I'm self-employed, so I'm not 100% sure yet. So you don't know. So in that case, your income technically went down because it's a lower salary. So they give you an option right here where you can self-certify your income. And there's basically a Word, you just do a Word document typing in the information that's on this screen here. I'll tell you exactly what to include in it. And you literally just put, here's my name, this is my estimated gross income, my family size, my date, and you sign that, and then you upload it. So you can put that information into the IDR application instead of using your tax return. So again, you can use your tax return. But if your income changed or went down, you can use your W-2 pay stub, or if you don't want to use those because they show commission and whatnot, and that commission might not be there in the long run, you can instead self-certify by doing that Word doc and uploading it here. Okay. Click continue. It's going to go through, basically a repayment estimator. I just put some estimations in here. Basically, it says estimate my payments. These calculators are pretty much garbage. Like I don't ever use them. Like these things don't necessarily mean anything, because yeah, they're garbage. Just don't trust these calculators. Click continue. It's going to go through a summary of all your information. You click continue again. You understand, you just agree, like you're not lying, you're not committing fraud. You click confirm, you hit continue. And that is it for the application. Now, how do you know if the loan servicer is overcharging you or not? Okay. First off, you saw on that last screen, they do some calculators, and I say that those calculations are often wrong. Most of the time, it's because people, they ask you for your adjusted gross income, and most people don't even know what that is. And they don't know how all these other things that they just filled out in the application actually factor into that monthly payment. And so when the government asks you for that AGI, a lot of times people put the wrong number in. And so then they get this monthly payment estimate, and it's wrong. Okay, so that's number one. Number two, it's like, well, how like if it is wrong, what do I need to do to check that? Okay, again, we have tools at FitBucks that when you build out your FitBucks profile, we highly encourage you to talk with the coach. You can use our financial planning technology. It takes into account everything like your 401k deductions, your household, all that type of stuff. And so you'll know, like, we will estimate what your payment should be. And if the payment's above that, like way above that, you know that it's wrong instantly. And as a FitBucks member, we'll notify you saying, hey, like, this monthly payment's a lot higher than what it should be. Okay. Other than that, you can try to use some tools and calculators. Again, a lot of them don't factor in a lot of the information. So I highly encourage you guys to sign up for FitBucks.com.